Singapore's rise as a financial powerhouse has reshaped the world. Today, many billionaires from the very Western countries to many in Asia have been storing their wealth of over billions of dollars in the island nation. There are hundreds, if not thousands of family offices in Singapore. Billionaires and millionaires have been buying real estate after real estate, much of which are worth tens of millions of dollars. But that's not where it stops. It's that Singapore is situated at the heart of Southeast Asia. The very region itself is poised to become one of the world's leading economic powerhouses in the decades to come. Coupled with the fact that India and China are not far off, this makes Singapore the promising base as the world's next Switzerland, or rather, the world's next bank. The question, however, is whether Singapore can actually become the world's bank and not be beaten by other countries. There are rising stars in Asia, some of which can potentially threaten Singapore's stance as the leading financial country. Well, to understand this, let us see the current landscape of Singapore and its potential future. The first thing to understand about the country is just how much money is really stored in Singapore. Well, data from the Monetary Authority of Singapore, non-resident deposits in the island nation is 62 billion Singaporean dollars for the year 2020. That may seem rather small because it is small money in a world filled with trillions of dollars. But according to globalbanks.com, Singapore actually has the second highest amount recorded for non-deposits for any country. Let's now get into larger numbers, because deposits aren't the only factor here. What is more of a better figure to use is a concept called assets under management. When you leave $1 billion or even a few $1 million, chances are you wouldn't need them for your everyday use. But as an affluent person, the best thing you can do isn't to deposit your money into a bank and lose its value to inflation. What you would actually do is to find someone or a firm to invest the money and grow it further. That's what leads to generational wealth and what actually showcases how much money is stored into one country or one firm. This is where Singapore shines as an asset manager. According to the Monetary Authority of Singapore, the AUM is a whopping 4.9 trillion Singaporean dollars for 2022, which declined by 10% from the previous year of 5.4 trillion Singaporean dollars. Out of these 4.9 trillion dollars, 76% of the funds were outsourced beyond the Republic, while 88% of this is invested into assets outside Singapore. This data is already showing just how important Singapore's financial landscape is. Trillions of dollars are no small money. The reason why investors trust Singapore so much is due to a lot of factors. Of course, we can simply say that it's a country with a stable political and economic environment, and it also has a robust financial regulatory framework. Some would also state that they have good tax incentives and favorable policies. But the most important factor here is due to people. To invest and make money out of it, you need to make a good investment decision. Only a few people in this world have made big bucks consistently. Most investors tend to lose money. One fascinating story in Singapore is the GIC, which is the country's sovereign wealth fund. They've made consistent money for the country and its people. According to its past performance, over the 2 decades concluding on March 31st, 2023, GIC realized an annualized return rate of 4.6% above the rate of global inflation. Furthermore, during the same period, stretching back to 2001, GIC has never recorded an annual loss, despite the many uncertainties that occurred, such as the 2008 global financial crisis and the recent COVID-19 pandemic. This likely suggests that GIC and many other Singapore investment firms are prudent investors, and is chosen by the many billionaires out there. Finally, let's talk about the elephant in the room: banking assets. What are banking assets? Well, banking assets refer to the various types of resources that a bank owns or controls, which contribute to its overall value and operational capabilities. These assets are critical for the bank's day-to-day operations, profitability, and financial stability. There are various ways for banks to get assets, either from customer deposits, loans and borrowings, capital, day-to-day operations, and so much more. But let's discuss the key figure, which, according to Statista, is a whopping 2.5 trillion US dollars as of 2022. That is a rise from 2002, when Singapore's total assets of its banks were just $823 billion. What does this imply? Mainly, it obviously shows Singapore's stance as a financial hub, and it shows their superiority in offshore banking. Now, it is important to see the competitors of Singapore and understand what lies ahead. Hong Kong, its main competitor for luring rich investors, is, quite frankly, ahead of Singapore in some categories. For instance, in the asset under management category, Hong Kong has about $3.9 trillion for 2022. Singapore, which has 4.5 trillion Singaporean dollars, is only at $3.3 trillion. This shows the competition between the two regions. Hong Kong, of course, is quite special. It is a special administrative region of China, giving it a unique position in the global financial landscape. This status allows Hong Kong to act as a gateway for investors seeking access to the Chinese market, which is the second largest economy in the world. Moreover, Hong Kong's stock exchange is one of the largest in the world, bolstering its role as a major global financial hub. For comparison, the total market capitalization of the Hong Kong Stock Exchange is $4.6 trillion compared to Singapore, which only has $670 billion. Again, this is because Hong Kong is listed under China. They have many Chinese corporations listed in the country, which bolsters its valuation. But it should not discount the fact that Hong Kong is really a competitor of Singapore. Now, let us discuss banking assets. According to Statista, in 2021, the total assets of banks in Hong Kong is a whopping $3.38 trillion. Singapore only has $2.5 trillion, which likewise makes Singapore trailing behind, but not by huge margins. The future of Singapore, of course, hinges on many factors, but the biggest ones we can see is that it will most likely be chosen by its Southeast Asian peers over Hong Kong, which is chosen by mainland Chinese or investors looking to invest in China. Moreover, foreigners outside the Southeast and East Asian region are also likely to choose Singapore over Hong Kong. This is because Hong Kong now faces challenges with political stability going forward. Hong Kong had massive protests in 2019, and the introduction of the national security law in 2020 has led many to choose Singapore over Hong Kong. It is even all over the news that people have been leaving Hong Kong. According to a report by SCMP published in August of 2022, over 113,200 residents have left Hong Kong in the past 12 months, which contributed to a 1.6% drop in population. That was also the second straight annual decline. By 2023, it also showed similar data by further decline. Many reasons are, of course, given, but a lot of studies and interviews stated that some have left due to Hong Kong's political unrest. But that's not to suggest that Singapore is perfect. The country has also been inflicted with recent political scandals, both in the government itself and even its own financial firms. Yet, if we look at the trajectory that the two nations are facing, Singapore still has the upper hand. Southeast Asia is still poised for growth, whereas China is now facing, as many analysts like to point out, a bubble economy. Take this figure into perspective. In 2022, Southeast Asia's combined nominal gross domestic product is around $3.6 trillion, far short of China. But by 2040, the region is expected to grow to a massive $13.8 trillion. China, however, has a high chance to see its economy stagnant. Data from the IMF already shows that China's economy is already growing slower. In 2019, China grew at 6%, but in 2023 showed growth of just 5%, and is expected to grow slower to 4.2% by 2024, following with the range of 4% in the next few years until 2028, which is the latest IMF prediction. But anyway, do let us know what you think. Thanks for watching.